Welcome to Fibocan's YouTube channel. You have done the right decision in your life by coming into Fibocan's YouTube channel. Who is Fibocan? Fibocan is a wealth enabler. How do we enable wealth? We enable wealth through training, coaching, mentoring, enabling students, investors to devise their own investment strategies through our comprehensive training programs and innovative investment strategies. So what do? We have published educational videos 1 to 16, module 1 to 16 in English and Tamil. The modules that start from basics of banking, capital market, investments, how to do investment, technical analysis, options, futures, then strategies of options and futures, and finally income tax on derivatives. To begin with, all these 16 modules are available both in English and Tamil. I would request you to go and select the appropriate playlist and watch all the videos and put your comments. So that is the step one. Every day we put videos about market commentaries. Please understand that we are not SEBI registered. Hence, we cannot give any recommendations. We will say whether it is looking good, technically sound, technically weak, has to be cautious. These kind of things we will give, but we will not give any price targets, or we will not give any stock recommendations. Only thing is that we are here to give technical education, imparting technical knowledge to anyone and everyone through our free educational videos, which we put every day on the daily markets, and during weekends we put about global markets. So I would request and encourage anyone in the age group of 17, 18, those who are studying in HSC, higher secondary or plus 2, to watch module 1 to 4, definitely either in English or Tamil, whichever language you understand out of these two languages. And anybody who is doing BA, BCom should watch up to module 8. And those who are doing MBA, CA, CFA or any professional or postgraduates should watch up to module 15. And for professional traders, it is ideally suited for them to watch module 16. I am sure that you will enjoy watching and enhancing your knowledge. Thank you very much. Today is March 19, 2024, Tuesday. Option expiry for FinNifty. First the level, then the power of technical analysis. FinNifty, it closed at 2601.95, 0.12% down. What happened? It opened a gap down. After opening gap down, it went down but formed a small green candle, slightly closed above, I would call, but below yesterday's close, which is why 0.12% down. Ultimately, FinNifty closed below the 50-day simple moving average and 50-day exponential moving average. As you are aware, it is being below the 20-day moving average, which is the Bollinger middle band, and also the 20 days exponential moving average for the last few days, at least 6, 7, 8 days. Right? BankNifty 46,384.80, 0.41% down. It opened a gap down and formed a doji, but here again it is below the 50-day simple moving average and 50-day exponential moving average. Nifty on the other hand it formed a solid red candle. It opened straight away below the Bollinger 50-day moving average and it closed sliding along the Bollinger lower band. So it down 1% down at 21,817.45. It is also below the 50-day simple and 50-day exponential moving average and also below the Bollinger lower band. So hence now Nifty had a severe fall. When we go into the individual analysis, we will know why Nifty is down. Okay, so I would request people to hold on why Nifty significantly underperformed BankNifty and FinNifty. But before that, the power of technical analysis. What is the level we had said yesterday? Bollinger upper band in the daily will act as a very good resistance, which was at 21,083. There was no question of it going over there. That moment it opened a gap down today, and the 50-day itself was acting as a very tough resistance, right? On the lower side, we had said that the Bollinger lower band is there, below which is the 200-day simple moving average is there, below which is the 200-day exponential moving average is there, which is 2100. It never went even to the Bollinger lower band. So these are the levels one to watch. That's what we are saying. Okay, it's not that we are not saying that it will close at this price or at this level. We are saying that the key levels to watch for. It's up to you. You can discuss with your financial advisor and take an exact position. But levels we are saying technical levels, very important, right? So that is the power of technical analysis. So many people say no, technicals are fundamentals and technicals are useless. No, both are good. Fundamentals, you understand whether a stock is good or not, but the time of entry and time of exit, technical analysis. That's what I always say, that market does not move on the basis of fundamentals but moves on the basis of perception. Perception is nothing but mood of market, which is nothing but demand and supply, that is accurately captured by technical analysis. So if a person is good in technical analysis, he or she will exactly know the levels, exactly know up to which point it will go, and from there where it will take a turn down or turn up, whatever may be the case. Right? Now let's go into the analysis. Banks: Axis SBI fell 1%, AU IDFC Yes Bank 2% down, Kotak up 1%, IndusInd Bank had a big fall of 3%. The others like HDFC, ICICI, Bandhan and Federal remained sideways. On the financials, Chola, IDFC, M&M Finance, Manappuram, Muthoot, Shriram all down 1%, excepting Jio Finance, which moved up by 1%. Bajaj Finance, which moved up by 1%. Sorry. On the insurance and cards, SBI Life 1% down, SBI, LIC and ICICI Pru 3% down. Oil and Telecom, Bharti 1% down, Reliance 1% down, Bharti remained flat. On the IT, Apple, Birlasoft, LTIM 1% down, Coforge, Infi, Techem, Wipro, Techem 2% down, Emphasis and Wipro 3% down, TCS and Intellect 4% down. So, does it explain why Nifty significantly underperformed? Yes. TCS was the main reason for today's significant gap down opening, and in fact breaking below the 50-day simple moving average for Nifty. And of course the momentum continued with all the IT stocks falling because they were precariously positioned. If you recollect, I had told the last 2-3 days IT stocks are precariously positioned. That means it can either go up or go down, but because of the global market weakness it has fallen, and that's why it has taken such a turn for the worst. On the consumer goods, here again everything fell. ABFRL, Asian Paints, HUL, Pidilite, Berger 1% down, ITC and Page 2% down, Britannia, Nestle, PVR and Trent 3% down. On the automobiles, Ashok Leyland, Motherson and Tata Motors 1% down, Bata and Bajaj Auto 1% up. On the metals, coal, National Aluminium, NMDC, Tata Steel 1% down, Jindal and Vedanta 2% down, SAIL 3% down. On the health and pharma, Sun Pharma, Apollo, Thyrocare 1% down, Divi's 2% down, Cipla and Dr. Reddy 3% down. Others, DLF, Godrej, IndiaMart, IRCTC, Z 1% down, L&T, Adani Ports, Adani Enterprise, Polycab and Ultratech 2% down, Nykaa 1% up. So overall, if you see that, there was nothing much to say which went up. That's why you had either sideways, downward with sideways, sideways with the downward bias, and because of the levels, 50-day, it has not decisively broken down. If you ask me honestly, the Nifty and BankNifty and FinNifty has not decisively broken down the 50-day, while Nifty has broken down. The moment it is decisively taken out, what is decisively taken out? At the moment it goes away, the distance between the 50-day moving average and the price will be at least 2%. That means that much of fall is possible. So as long as it hovers around here, I would say that it will try to capture that. But if it is breaking below that, you will have significant fall. That's what it is. With all these things, what is the level that we can expect for BankNifty technical levels that one can look for? Simple. On the upward side, one can look for is the March 13th close. That's something which is very important, which is at 46,981.30. That's one thing which can look for. The next level above is February month high, which is at 47,363.40. That's an important level. These two will act as a very good resistance, hence no one can look for whether this is holding or not. As far as support is concerned, it's very difficult, but the first is the 100-day exponential moving average, below which is the 100-day simple moving average, which is at 46,058, and below which is the Bollinger Lower Band, and below which is the 200-day simple and exponential moving average, and the exponential moving average 200-day is somewhere at 45,316. So you have 5 levels that are available. So based on your risk taking appetite and your discussion with your financial advisor, you can accordingly play, but carefully watch the levels. That's why, see, I am here to give only the levels. Thank you very much.